Hello and welcome to Pro Trader Strategies with my camera all whack. My name's Eric Wilkinson. Some of you guys may recognize me as the Wolfman from CNBC, Fox Business, or even the Wall Street Journal. I'm here to teach you guys some different option strategies you can then implement into your portfolios, but please do that in your own way. Also, remember, past performance of any trading system or methodology is not necessarily indicative of future results. All right, having that out of the way, let's get it on with economic data. It's a Monday. Yeah, we don't usually get a whole lot of good economic data on Mondays, but we got a decent one. It was the CB, consumer confidence, not majorly looked at, but it gives us a good indication how the retail or the consumer is feeling about the overall economy. Came in at 134, which was much higher than expected at 130. So nice beat on that, maybe giving a little bit of lift to the overall equities. But on the other side of the coin, we have China like really weighing on our markets today because they're talking about locking down some precious metals and some other things that weren't originally talked about. That could be something that could hurt us. Another thing though, it looks like China's back up to their games with Alibaba coming out with their earnings, and there's like a $2 billion influx somehow. I guess it's an accounting irregularity that people are talking about. That being said, Baba, I don't know what's happening there, but again, you have to be weary about China and their economic data points for sure. That just being one of those. All right, let's talk about crude oil. It is below 60 still. We talked about this. I thought that we were going to really see this market start to peel off and go below and settle below 58. We haven't gotten that settlement below 58. That would be this line right here with the Fibonacci that I've been talking about. This is the 100, or this is the 0 on the Fibonacci extensions, where I've created the extensions down to this area. It lines up quite nicely with the 32 Fibonacci, but we've talked about this. We've talked about this before, that I thought that the market would peel through this 59-ish area and then come back down to the this Fibonacci right here, which is lining up with $58. I think that market is wanting to go and test this. For me, that would be a good thing for the overall economy. Obviously, I've talked about this till I'm almost blue in the face, that when we have low oil prices, that allows for velocity of money, especially in an economy where we're worried about it going towards a recession or that we're going to see a pullback. Like this is the longest expansion we've seen in a very, very long time, maybe even ever, before having a recession. So, that dark cloud is hanging over everybody's head right now, and it's kind of waiting for the next shoe to drop. That being said, if oil could peel down into the mid to lower 50s, that would help this economy start to gain some more traction. I can't emphasize enough how important low oil prices are to the economy. I don't care if people say we want the inflation and all this other stuff. It's baloney. If you have lower oil prices, it's going to help the broader economy across the board. All right, we've got yeah, I could keep talking about it. Sorry, guys. I'm going to move on. All right, we've got gold futures coming off by about $6 as well. It is really close to that Fibonacci 61 level here that we're talking about, but the point of control being right here. We've got the POC right there that's lined up around 1284. We're just slightly below that, as you can see. So the market, I think, is going to start to settle down here. We've had some move where we've gotten this up move, kind of a bit of a correction, some volatility in there right now. What I think we're going to start to see is this, we've got this action going on like that with my pen messing it up. Oops, let's try and get back to where I was here real quick. Anyway, back to that thought, but we get this gyration where we got that. I think that we're going to start to see it settle down here in and around this level. I don't think that we're seeing inflation or anything else. It's just going to be like on the cusp of a breakout to the upside or the downside. All right, bonds. Totally blowing it out of the water here to the upside. Just a massive rally. Went up, tested that 152 handle, hit that even, and that's where the market started taking some profits. I think even some bond bulls are starting to get a little bit concerned about this move to the upside here. That erasing several different FOMC hikes. I don't think that these guys are going to turn and put their tail between their legs right away before they start lowering interest rates. I think that they're going to let this meld for at least the rest of the year. So I don't think interest rates are going to start to go lower, which again, bonds I believe are overextended to the upside. All right, the VIX is moving in positive territory, despite the fact that we were seeing some push to the upside. Dow was up almost 100 points right off the open. Nice big rally in both the bonds, Dow Jones. Okay, nice rally in Dow Jones, NASDAQ, and the E-mini S&Ps right off the open. But about 30 minutes into that, we started seeing the dark cloud move in over our equities, and the bears started selling quite dramatically. We'll see that show up in the 15-minute chart here, or 30-minute chart in a minute. All right, NASDAQ still in positive territory, but obviously you can see that it has come off of its highs. The fact of the matter is, I've talked about this, and the NASDAQ has gone down to the point of control. So is the Dow Jones. We're still waiting for the E-mini S&Ps to make that move. I think that that move needs to happen before we see a resumption to the upside. So just as a technical move, I think we're easily going to see this E-mini S&Ps trade 2777-ish, right around in that area, and we could easily see it go down to test this 2734 line in the sand. So the market is going to want to come to this level because we got that 200-day moving average, simple moving average right here, and then we've got the POC right here. So both of these things are going to cause this market to want to come down and test those areas. Now, if we start getting some momentum to the upside, we could easily see it test over to this area, the 2734 area, okay, or we could even call it 2735. That is going to be the next support for this market, and a 50 Fibonacci is going to be something that is hanging over the market's head as it starts to roll over, if it starts to get that move to the downside. Now, another thing to note also that's, you know, in the back of any trader's mind right now is these highs right here that were printed overnight. That is something that the market wants to print during the day session. So I think after we see this market roll over and test those areas, that's once we see this kind of come down, test these areas, we can see the market then resume to the upside. But before that, I think that the market wants to come down, test these areas, put the thumb screws on just a little bit tighter for anybody who's bullish, and then shake some weak hands out and then make that move to the upside. All right, here we go with the E-mini S&Ps on the daily chart. This is a 30-minute. Each section here, the gray sections. So this gray section is the overnight. This is the day session. All right, 30-minute candles. You can see that today, coming into the session, overnight inventory got short. They flushed those boys out coming into the day session, and then as soon as the market opened, yes, that printed inside of today's market. So that flushed out any kinds of shorts that was in there, and then immediately the market turns around and starts resuming its move to the downside. Once they flushed out the weak shorts, then those guys got short, and the overly short inventory caused this market to kind of roll over there, as you can see. So E-mini S&Ps in negative territory, while the rest of the equities are still in positive territory. But the E-mini S&Ps are is the index that I think that needs to go down a little bit further. So we could actually see the E-mini S&Ps pull down some of those bigger boys as it tries to reach a couple of those objectives that I've talked about. All right. Here's the trade that I've done for today is in MRK, and I decided to put on some things for the downside here. As you can see, we've got this doji at the top. This is the one thing that I've been looking at. It kind of looks like it's topping out. We're getting another one right now, but I'm looking for this market to sell off. So in that, that would be confirmation of my trade. Like I said, I got in. I usually get in a little bit earlier before I see the confirmation of the setup, but I'm going to be out if we trade. I'm I'm going to be out of this trade if it goes up and trades above or greater than $82.50. Okay, so that's where I'm going to be out of this trade. Now, for the trade that I'm going to be in on, to the downside is what I'm playing in this. So I went in and I'm looking at the July and bought the 85 puts. The July 85 puts is what I bought, and I sold the 75 puts to pay for some of the extrinsic value of the 85 puts. So basically I own those for their actual value, and I talk about how to set all of that up in my webinars. I don't have enough time to really go into this, so I did this all for $3.97. Okay, so looking for this market to roll over and just come down and maybe at least test this area, but I'm hoping that we go back down to the point of control, which, as you can see, lines up with that 75 strike that I have on right there. Okay, so I'm looking for the market to come down, test my 75 puts, which is, you know, why I set it up this way, and looked at it as a pretty good trade, despite the fact that I don't normally like to do debit spreads. This is a good one. Like I said, this is a debit. So looking for that market to make a correction. This fits all my rules with a good underlying tight markets, the width of the spread versus the amount that I'm paying for it. All of those things looking pretty good. The duration being the July. It's not quite as far as I'd like to go out, but I'm expecting this market to make that move relatively quickly. So I don't expect to be in this trade for much longer. Also, I wanted to be where there was no earnings, so that's why I ended up picking this little area in here for my options. Okay, stay away from the earnings and all of that stuff because I don't want the expansion and volatility going into that trade. All right, that's about it. That's the only thing I've really added. Haven't taken anything off because I really don't have a whole lot in my overall account anymore. So I need to start adding. Despite the fact that I've been talking about wanting to sit on my hands, I need to get something to work here. So I'm just going to be looking for really good setups and high probability trades. That's it. That's all I got for you guys. I hope everybody had a great Memorial Day weekend and are surviving today. All right, so if you can't take that, take it easy.